We got some data out this morning, didn't we? We're on the mortgage front. We got applications rising last week after touching a 6.5-year low the prior week. But of course, doesn't necessarily mean we're out of the woods yet, right, Mark? So anyway, let's get the inside view now with the CEO of a leading mortgage processor, fresh from the opening bell. First on CNBC, celebrating the company's spin-off from Fidelity National Information Services, we have Jeff Carbienner. He is the president and CEO of LENDER Processing Services. Jeff, great to have you with us here on the show.
Great to be with you.
I want to know why you're spinning off and whether or not you think you can make it as a standalone company, considering that servicing the mortgage industry, I would imagine, is at the moment a pretty difficult industry to be in.
Well, actually, you have to really look at the types of services that we provide. We provide the basic technology platforms and services that help mortgage lenders run more efficiently. So as volumes have gotten tighter and tighter on the origination and refi side, and as they've actually expanded on the foreclosure side, lenders have relied on us to provide them with the types of solutions to process efficiently. So actually it's been a benefit to our business.
Can you give us an example of a solution that you would provide?
Absolutely. If you look at what we do, 50% of the mortgage loans outstanding in the country today actually run on an outsourced basis on our systems in Jacksonville, Florida. So we service those loans each and every day. And as lenders have to face decisions on what do I do as loans get more and more troubled, we provide the solutions within our servicing applications that help them manage losses, do loss mitigation programs on individual loans so that they can modify those loans for consumers, lead them towards a refi if that makes sense. We help make that whole process flow.
There are paradigms or whatever that your software can use to help make those determinations?
Well, you know, what we do is we provide the basic workflow technologies and the data that's necessary for a lender to make the decision. We don't actually make the decisions themselves. We make the lender more efficient in making those decisions, and not just with technology, but also with data. We're one of the leading providers of data across the country. We have expansive databases on all the properties in the country that we can bring in, and on the consumers that we can bring into the decision-making processes for a lender.
What are your growth prospects like, and what's your outlook for your market share?
You know, I think based on how we view the market today, that again, going back to what I said on the front end, when you look at the stress that's in the lending industry today because volumes on the front end are coming down, and those are really the revenue-producing volumes that lenders rely on. And then you see foreclosure volumes starting to rise, and foreclosure volumes don't generate new revenue sources for lenders. They need to find ways to operate more efficiently, and that's what we help them do.
But they do generate more revenue for you.
Absolutely.
Is that okay? Now, where do you go from here? I mean, in certain businesses, certain industries in this country, particularly in tech, but oftentimes in food, a lot of money is made with products that did not exist 3 to 5 years ago. Is your business like that? I mean, what sort of R&D, what sort of brainstorming do you do to come up with new ways to service your clients?
We listen to our lenders. If you look who our top customers are, we focus on the top 25 or top 50 lenders in the country because those are the lenders that make the loans and actually service the loans on a go-forward basis. So we're in constant contact looking for where their needs are. And if you look at our growth strategies, you know, we're really boiling down to a couple of key areas. First, it's to do what we do well today. Utilize our existing products, our existing technologies to drive share. But you're right. We're always looking for that next way we can expand our technology platforms out. A good example is when I said we process 50% of the mortgage loans in the country today, those are first mortgages. But where our lenders are leading us is that they need help on the home equity line of credit front and having more robust systems to manage risk on that front as well. So we're expanding our technology solutions out to support HELOC loans. Another area that we look at is ways to expand out our basic product set. We think we've got a very complete product set to help our lenders with appraisal services and flood certifications and tax data, things like that. But we're always looking for the next opportunity, and where we've identified what we think is a very high potential opportunity is data and analytics. You know, if you look at the market today, lenders have done a great job on the front end underwriting, on the back end during loss mitigation, but there haven't been great portfolio management tools in the middle to help predict default, say, 12 months before they're going to occur. That's where we're heading now. So it's really a matter of listening to your customers, looking where the needs are really growing, and then being able to be flexible enough, which I think we are. And that's where you get back to our scale. The fact that we're nearly $2 billion in revenue, the fact that we generate significant cash flow, that makes our lenders, our customers, feel very comfortable with us and our ability to invest back in.
Thank you so much for joining us today.